All right. Good morning. It's another week of What the F Happened. If any of you have actually been paying attention, not so much to the news, but to what's actually going on out on the street, you're probably confused. You're probably confused because the news says everything's good. It's a Goldilocks economy. The markets are going to make new highs, but yet when you're on the street, it just doesn't quite seem like everything's right now. These are some of the topics we're going to cover. We're going to cover population crisis. We're going to cover what's going on with retirement accounts in this country, the United States, and how far behind the majority of all U.S. citizens are when it comes to retirement savings. We're going to talk about Bitcoin. Oh, yeah. We're definitely going to hit Bitcoin. And we're going to talk about impact and influence of what's going on with the Fed. That's what we're going to hit today in What the F Happened. We'll be right back after this. All right, we are back for another week of What the F Happened, and I am super excited. I wasn't here last week. I was in California at a mastermind, and pretty interesting, like hearing the sentiment out there, some really high-level real estate investors, just hearing their take on things, and it's a mixed bag. It's definitely a mixed bag, which it should be a mixed bag with all of you on here right now as well, because like I said in the intro, if you're watching the news, you're sitting there seeing the markets making new highs or testing new highs. You're seeing everything looking good. The Fed's probably not going to raise interest rates. Oh my God, we're going to soft land this thing. But then when you're out on the street and you're talking to folks during these holiday seasons and you're hearing how everybody's a little pinched, how everybody's got a little bit too much credit card debt, and you're trying to compare the two and you're sitting there saying, something just doesn't smell right. It's like when, somebody in your house uses the restroom and you walk by and you get a whiff, you're like, ooh, yeah, that's kind of what it smells like out there on the street. Something isn't right. And I think that's what we're going to talk about today. But I'm joined by my partner in crime, Mr. Snaggy, in the house, coming in live from Jupiter, Florida. What's happening down there in your neck of the woods?
Hey, good morning, everybody. Hope you're having a great week. Just hanging out, getting ready for the holidays, and staying busier than ever leading into 2024 right now. So it's great to see a lot of people hopping on YouTube, really taking a dive down the financial education rabbit hole and learning how to take back control of their money. And, a lot of people are just kind of sick of hearing all the lies out there. Whether you I turned on the news for like literally 2 minutes the other day when I was looking for a football game, and I left it on for literally 2 minutes. And it's just like the stuff that they were spewing out of their mouths was just, I was like, do people really watch this stuff anymore? And then you see people like Elon Musk and Twitter and everything that's going on with free speech. And it's a beautiful thing. I think that, we're going to lead every single day to teach you the truth, what's really happening, because I've seen too many people get hurt in past crashes, past recessions. We all know it's coming. We all need to be ready for it. And that's exactly what we're going to talk about today. Some things that are happening in the economy, driving the markets, driving your money. And then at 1:00 p.m. Eastern today, of course, we got the weekly wealth webinar series where we just dive in all kinds of cool opportunities, financial education, strategies, and tools. So see you guys there. But it's a beautiful thing leading into the holidays right now, and super happy to be here, Chris.
I love it. Shauna just came in from YouTube. She said, the crazier it is out there, the better it is in here. She's referring to the campfire because, hey, listen, all we smell is opportunity, but it's hard sometimes to shut the noise off, even for me. I mean, listen, folks, like I don't know how many of you nerd out like I do to economic reports like this one here. This is an economic report from a family office. I love their economists. Then we've got all these economic reports. I literally just nerd out on data. Plus, I'm continuously reading books after books, reading a great one right now. If any of you are looking for a good read, it's a bit scary, but it's really good. It's about geopolitics, and the book is called, well, actually, what is the book called? The End of the World is Just the Beginning. The End of the World is Just the Beginning. That is a good book. I'm about a little more than halfway through it. You know, it covers everything from oil to population, which I'm bringing that book up because I do want to talk a little bit about some important things. And Jax Campbell nailed it right coming in from TikTok. He said people are buying shit they don't need, and that's what's not right. You're damn right they're buying shit they don't need, and that's definitely part of the problem. Listen, folks, we've covered this on other episodes of this show about the credit card pandemic. And yes, it is a pandemic because it just breached $1 trillion. And it was kind of funny. We were looking back, and just a few short years ago, we did a YouTube video all about credit card debt hitting all-time highs. Does anyone remember a few years ago how much credit card debts were in this country? Well, if you don't remember, I'll give it to you. It was a little over $400 billion. And we were just like, oh my God, we are going off a cliff. Shit's off the rails. Like, things are going down. Credit card debts in the United States of America are over $400 billion. Now, Stephen, you remember this, but let me rewind the clock. That was just a couple years ago. We are now over $1 trillion. So what Jack said about people buying shit they don't need, here's the thing. We have gotten used to, all the things that once were a luxury to us are now a necessity. And we've gotten used to those necessities, which really are luxuries. I mean, and we keep spending to maintain that standard of living, but we can. Stephen, what do you got there? You got a chart up here. What is this thing?
Showing just, holiday retail sales in the U.S. over the last 23 years. You can just see, like Jack's saying from TikTok, people just keep buying more and more and more crap. I mean, I don't know how else to show it.
Well, I think we all need to go back and watch that Charlie Brown episode where Charlie Brown is trying to figure out what Christmas is all about, and he's super bummed out because he just doesn't understand Christmas and how it's going corporate, and it's all about buying things, and he asks Linus, to explain it, and Linus does the perfect explanation of Christmas. Christmas is not about the gifts we give. It's about the love we share. It's about the time we spend. It's about the celebration and the true meaning of Christmas. And I think, well, I mean, it's not just now, but I mean, for decades, it's been all about spend, buy, overdo it. And I have a 3.5-year-old. And one of the things I'm really trying to do is not spoil her at Christmas with tons of gifts. I want her to respect what Christmas is about, and Stephen, this, you'll respect this because I know you got a little one and many of you do too. At 3.5 years old, she's aware of things a lot now. She understands things. So I've been praying with her every single night. And one of the coolest things happened the other night, as I'm praying with her, which is usually me praying and trying to get her to kind of just say the same thing. She just went off. She just started praying like on her own and like, thanking God for Cash and for Mimi and for Loli and for all the people in our family. And that was really cool. Not to go down that rabbit hole, but I think it's important sometimes that we get back to the basics, because that chart right there that you just showed shows that we're just spending just so we have more presents. And here's one thing, with the mastermind, and I got to bring this up, and we got a lot of stuff to cover today, and I promise we're going to, but one of the things the founder of that mastermind I was at does around Christmas is he goes into like Sam's Club and Target and Walmart, and he literally raises money, gets a bunch of people to put money in, and they pay off all these folks' layaways. And he went on a tangent about how, we take Christmas for granted. We take it for granted because, listen, there's multimillionaires in there. I mean, there was people who had hundreds of millions. I'd say that probably the lowest net worth in that mastermind was $3 million. And, he's saying we all take this for granted, but he said, when you really look at what's going on out there, some kids won't have Christmas. Some kids' layaways will get put back on the shelves because there was $40 left. He's like, that's what I'm trying to do, is just teach people that, listen, like, although it's easy for us because we've reached a certain level of net worth, there's people out there struggling. And anyway, as we get into the season of giving and the season of loving, and the season of being thankful and grateful, I just think it's important sometimes that we get back to the basics and put the credit cards away and realize that Christmas isn't about the gifts under the tree. And it's about, exactly what Linus told Charlie Brown, and then he got it. So anyway, Stephen, anything you want to say on that?
Yeah, just on that, like we were actually just having this discussion, and, there are a lot, we're very blessed. We work very hard. So we have, we're able to buy nice things if we want for our children, but they're definitely, are limits there. There's definitely lessons to be, learn as you're a young parent. I mean, my child's 8. I know Vivi's 3 or 4 now.
Yeah.
And so we're still learning this whole parenting thing, and hopefully kids are at school and not listening right now. But one thing came up with Santa this year was, my son still believes in Santa and loves it, and, his friends do and things like that. But, when you look at like which presents come from who, we've really decided to kind of give like some nice little, real humble little presents that come from Santa, and not like kind of the more expensive gifts. And that way, when he goes to school and maybe says, hey, Santa bought me, I got this from Santa for Christmas. Well, maybe that's kids, Santa got him something much less because his parents couldn't afford something more expensive. And so you don't want to ruin that Santa holiday for children that are less fortunate. And so little things like that can really make a big difference. And then, as they grow up, just explain to them, the reality of the world. Like, we can have nicer things, but not everybody is that fortunate and that blessed to be able to do that. And that's okay. And so there's a lot of lessons around this time of the season too, that you can really talk to kids about. And I've been doing a lot more of that as my son's, starting to get a little bit older here.
All right. So let's dive in. I think let's get into some of the news, some of the economic reports, and some of the things you guys probably do. But there was this interesting thing in one of the economic reports that I think sums it all up. And this was a quote. I don't know when it was done, but it was written by Hunter S. Thompson. You probably don't even know who he is, but I'll read this to you. It says, life should not be a journey to the grave with the intention of arriving safely in a pretty and well-preserved body, but rather to skid in broadside in a cloud of smoke, thoroughly used up, totally worn out, and loudly proclaiming, wow, what a ride. Think about that for a second. We go through life trying to be so conservative, trying to always protect and stay safe. And like, that takes the fun out of it. It really does. And I also want to put that in that, along with that skidding in and saying, wow, what a ride. We don't have to take rides we don't want to take. Although we should go out and live life to its fullest, we don't have to take excessive risks, put ourselves through excessive stress, and put ourselves through unfathomable pain. And if any of you know what I'm talking about the stock market. I don't know how many times we got to talk about this. This economic report from a family office that manages, like, you can't even talk to this family office without 50 million in assets. I know the owner of it. I was fortunate enough to meet him many, many years ago. But in this report, and I'm just going to hold it up, not that you guys understand what this stuff is, but I want to hit some of these things to further let you know that, listen, like, I might be the talking head that you all listen to, and Stephen might be the talking head that you're talking to, but it's not, I'm not just rattling off stuff just for my own, well-being. I'm trying to warn everybody. I'm trying to let everybody know that, like, literally, like, things are just not okay. I'm just going to put it right out there. Things are not okay. I know Bitcoin's going up, but you know what? I got an economic report on that. Bitcoin's going to probably go down. Bitcoin and the stock market are correlated, folks. When Bitcoin goes up, Bitcoin is now the leading indicator, okay? Which means Bitcoin's going to rise before the markets. And what has happened recently, right? There's so many new, Stephen, you see how many new gurus are out there about Bitcoin again because it's going up again? Everybody's a Bitcoin expert. Every YouTube video, like, all the guys are out like, oh, Bitcoin, Bitcoin, Bitcoin. Hold on a second. I think by now we all realize that Bitcoin in the stock market, or Bitcoin in the S&P, or Bitcoin in the NASDAQ, or Bitcoin in the Dow Jones, I don't care what index you're following, okay, are very correlated. Correlated, just for those of you that don't understand, means they're literally connected. One follows the other. It's the easiest way to say it. So this economic report, which came out December 5th, said Bitcoin has continued to edge up as high as 42,000-ish. I don't even know where it's at today. I sold my position, which I know people said I was crazy. I literally told people at the mastermind, I'm like, yeah, I just sold my entire position again. And I do this all the time. I buy it low and I sell it high, and I buy it low and I sell it high. And while all that's going on, I dollar cost average in, which means every week I take a $200 purchase of Bitcoin and a $200 purchase of Ethereum. And then what do? Well, I don't even watch it. I'm not one of those that goes on my Coinbase and like, oh, wonder what it is this hour. Oh, wow, it went up. It went up $2. It went up $10,000. Oh my, I don't even look at it. I just watch, like, I wait for a sign to come. It's almost like, I'm waiting for a sign from God to say, sell. And that sign always comes. It's like somebody talking about how excited they are that Bitcoin's going up. And I'm like, oh, wow, it's in the 40s. I'm like, oh, shoot, I bought it in the 20s. Sell. And guess what I do? Lock in my profits. And you know what else I get to do? I get to pay taxes. Damn right I get to pay taxes. So here's what I'm trying to explain to all of you, whether it's TikTok, because I know we got a lot of Bitcoin folks or crypto folks on TikTok. I love crypto. Okay. I love Bitcoin, Ethereum. I love blockchain. We fully believe in it here. Okay. We do. Are we sitting there saying it's going to the moon tomorrow? No. In the future, I think it'll be a great play. And you can invest in it for the long haul. You just got to close your eyes and just let it go because it's going to be a rocky, rough ride. So right now, the prediction is, it's going to hit its next resistance at 47,000 to 48,000. And then it's probably going to go down. And guess what's going to happen after that? All the indexes are probably going to follow it back down. We are literally right now bumping up against the highs, the all-time highs. So let me just put that into perspective now that we're done with the Bitcoin one. And also, folks, we got little Lazy Cash in the house. So everybody say hi, Lazy Cash. He never misses one of these. But we are literally touching all-time highs on almost all indexes. If you look at the indexes, and Stephen, I don't know if you want to pull up the indexes, but I was looking the other day. The Dow's down a little bit right now in anticipation of what Jerome Powell is going to say. But let me just get that out of the way. Jerome Powell's not going to raise interest rates. They're not. Okay, they're literally going to probably make the mark in the sand saying, okay, we're done raising rates. Now we're going to just kind of let the balls fall where they're going to fall because they've done enough damage. They are going to continue to unwind their balance sheet and let bonds mature off their balance sheet. And they're doing that to the tune of about $90 billion a month. But look at this, Stephen. I mean, it's almost, I know TikTok and Instagram can't see this, but what we're looking at here is the Dow Jones. I mean, okay. Listen, you can all get excited, and I know there's a lot of young folks that watch this show, and I know you're all like, oh, it's going higher. It's doing good. The markets are going to be great. The Fed's going to take care of it. The Fed's going to start dropping rates. They said, some, I can't remember who it was. Some pundit came on and said, oh, they're going to start dropping rates 4 times. And it was the talk. It was the talk of the internet. Oh, the Fed's going to start dropping rates 4 times in 2024, which would be great for any of you that have listened to us about buying treasury bonds because you're going to make a bunch of money. But I got some news for you. I doubt the Fed's going to drop rates 4 times. That was just someone's opinion, and it went viral. And everybody started thinking and actually literally saying it was Jerome Powell saying they're going to drop interest rates 4 times. Absolutely not. They didn't say anything of the sort. Matter of fact, they said they're going to keep rates higher for longer. Okay, so this probably will be a good day for the market. We'll probably see it go up. But just like this report Stephen's got up, this chart of the Dow Jones, we are at all-time highs. And if you were to shorten this down, go to 1 year, okay, so we can kind of see where we're at. We're literally bumping up against all-time highs. Now, if I can just ask everyone a question, just logically thinking, forget about your emotions, logic. How can the markets, the Dow Jones, the NASDAQ, the S&P 500 push through the highs, the highest of the highs? What's going to push it through, folks? Is the Fed going to print more money? Nope, not anytime soon. Okay. Is the Fed going to raise rates anymore, which is good for the markets, which is why they're touching all-time highs? No, but they're still going to hold them higher longer. Which means your food prices aren't going to go down, which means your loan prices aren't going to go down, which is kind of interesting. And this just shows the stupidity out there. There was an article in CNBC today, right here. Mortgage refinance demand jumps 19% after rates hit lowest levels since July. Folks, rates aren't low. Hits lowest levels since July. Oh my God, we should go out and cheer and refinance our homes. Are you fucking crazy? Anyway, that just shows that people are emotionally making decisions, not on logic. And I'm trying to save all of you from making stupid, emotional-based decisions. Don't refinance your house right now. Just because rates are down 0.25% or maybe 0.5% from when you got your mortgage, do not refinance. It is the worst possible thing you can do. The fees alone in the refinance will eat up anything that you would ever possibly save. It's pure stupidity. But here's what I'm trying to get at. And I'm going to try to wrap this up and close this section. Ask yourself, what is going on in the economy, in the world right now that logically would result in the markets going higher? Anyone? Anyone? Who can tell me what is going on right now in the entire world economic environment that possibly could take the stock market higher than it is right now? Are they going to print more money? No. Is the economy going up or down? It's going down. Are interest rates going to go down quickly anytime soon? No. It's all speculation, all just smoke and mirrors, house of cards. What will take the markets higher? I got a couple people coming in, Jim and Facebook user, saying the war. Okay, what war? Oh, we don't even hear about that in the news anymore. Yeah, there's no war that we're even hearing about in the news. It doesn't even seem like they want us to know about it anymore. It was almost seemed like it was a distraction. Could we end up in World War III? Absolutely. Is that going to be good for the stock market? Absolutely not. Not in the front run. Okay, if we enter a war, that will not be good for the markets. I know a lot of people, when they study previous wars, they say it was good for the economy. Yes, but not in the beginning of the war. Okay, in the tail end of the war, because they obviously have to make tanks and planes, and there's a lot of spending. But usually that spending is done by borrowing more money. And folks, listen, the government, well, if you listen to Ray Dalio, he said we've crossed the point of no return. The government is literally in a spending spree that they can never stop. They're over $1 trillion in interest just on the deficit. So what, please, what can take the markets higher? Anyone? Okay. TikTok Circle said lower inflation, soft landing, recession. You're watching different news than me. Right, because I'm not watching the news. That's why I'm watching different news. Jobs, more jobs. Okay, so TikTok did jobs. A lot of people did say war. So a lot of good comments coming in from TikTok. A lot of great comments coming in. I'm just seeing here. Michael nailed it. Michael coming in from Facebook nailed it. Nothing. There is nothing right now in the global economic environment that will take the markets higher. Mark my word on that. Nothing. A war will not take the markets higher. Then somebody mentioned Bidenomics. I'm sure they're joking. Somebody else mentioned lower inflation. Yeah, inflation's been going down, but the damage is already done. Okay, so that's not going to, a soft landing isn't going to happen, but okay, maybe, but that's not going to bring the markets higher. Okay, and then somebody else said jobs. So I actually have something to talk about jobs. So listen, this is that economic report, and I want to try to give everybody just a snapshot. If you're watching the news, which is different than the news I'm watching because I'm not watching the news, I'm reading economic reports. So when we look at a Bloomberg report, jobs plentiful to hard ratio, there's a whole article, and I don't want to get too deep into it, but this is an essential economic data point, okay? Consumer and producer prices and indications of economic activity in the U.S., Europe, and Britain. Because why just look at the U.S.? This is a global economy. Let's look at them all. The Federal Reserve will also hold its rate-setting meeting, which is happening today. So anyway, it's going on economic data that came out in November. Headline numbers suggest that the economy created approximately 199,000 jobs in November, higher than expected. Woo! We're getting there. We got more jobs. The economy's robust. Everybody's working. Whoa, hold on a second, Stephen. Hold on a second. May I continue what the news will not tell you? Because that's what the news told you, right? Oh my God, we got more jobs. We beat expectations. Things are great. It's like Tony the Tiger. Great. Yeah, anyone that's old enough knows what I'm talking about with that. But looking a little deeper inside, behind the curtain, what we will find is that the headline number shows two areas of growth. Does anyone want to guess? Anyone want to take just a wild stab? How about TikTok or Instagram, or how about YouTube? Anyone want to guess what those two areas of growth are? Come on, drum roll, please. Go. No? Okay, I'll just tell you. You should have already guessed this. Government. Oh, yeah. IRS agents, baby. Who are the IRS agents coming after? It isn't the wealthy folks. They're not going after Elon Musk and Warren Buffett and all the wealthy folks, because they've got what? They've got good representation and trust and all sorts of things. And all they're doing is following the IRS code. They're coming after you. That's right. Middle class. They're coming after you. They're coming after the folks that make less than $400,000 because they know that you don't have the money to fight the IRS and you don't have the team to fight the IRS. So coming to a theater near you, you might get to visit with an IRS agent. So what other area are they growing? Healthcare. So those numbers, those expectations that got crushed were solely, almost 100% a result of government hiring and healthcare hiring. That should not excite you. That isn't real growth. That isn't real job growth. Maybe it is, but that's why the government just keeps printing. Well, the government's not printing it, the Fed is, but they're still using it. So then the other thing that you need to take, into these numbers is, you remember there was a little UAW strike? Yep. Unemployment rates dropped 3.9% to 3.7%, which surprised many, suggesting there is still a lot of turbulence underneath the headline number. So when we look at jobs, and I've got them right here, folks, jobs are declining. New job growth, if you subtract government jobs, are declining, and rather steeply. Matter of fact, going into this year, the labor market is slowing, not growing. So what news am I watching? Fucking economic reports, baby. It's the best news since Bob Ross painted the picture of what? A waterfall. That's right. I have no idea where the correlation was. I watched Bob Ross last night paint the most beautiful waterfall, and I can't get it out of my head. So anyway, that's one of the things. Then we go over here. This is talking about lags, right? We talk about this a lot on the show, and I think this is really important to talk about. So they're always talking about what's going on in the markets and, jobs going up and everything's good. We're going to soft land this son of a bitch. The Fed's got this all under control. Oh, yeah. Well, you sometimes forget that there's a lagging indicator in a lot of this. A lot of the news stations, which I'm not even going off of the news, folks, because it's just pathetic. It really is. I mean, when I read that mortgage refinance demand jumped 19% after rates, as if rates hit the lowest levels ever, that just makes me not even want to watch it. But anyway, when we talk about lags, we talk about what is a lagging and a leading indicator. Okay. Leading indicators would be trucking and logistics. And matter of fact, I just heard a report. Did anyone else hear this? Did anyone else hear that in California, as of 2024, I don't know the exact date, sometime January or February, they no longer are going to allow logistics companies, trucking companies, to add combustion engine tractor trailers or trucks to their fleet. Yep. I don't know how true that was. I saw that. It wasn't a fact-checked report or video that I watched, but can you imagine that? Only in California, they would say. So let's get back to this. So the loan default rates. Okay, so we've got people rushing to refinance, okay, because, rates are so low right now. And we've got everything doing well. Everybody's employed, jobless claims are going up, jobless claims are going down, and more jobs are being created. So let me just read this. Economics consistently remind us that the monetary policy is subject to variable lags. You don't say. The loan default rate, okay? When people start to default on car loans and mortgages and credit card debts, that'd be an important indicator to look at if you were thinking, all right, where is the economy going? We going up? We going to the moon? We going to make new highs on all the indexes, or are we going the other direction? Well, when you look at the lagging effects, this is perfect. Delinquency rate on credit card loans. Before I get into this report, Stephen, you got to hit this because this is an economic report. FRED. You guys can all look it up. What does this say, Stephen?
Yeah. It's just showing exactly what you're talking about, that delinquency rate on credit card loans are, skyrocketing right now. We saw an uptick going into the COVID pandemic. We started to see the market pull back, obviously printed more money than we've ever had in the history of the world, and spending like we've never seen before in the history of the country. And all that money flooded and really drove credit card usage down, savings up. And now, that lasted for a couple of years. And now we're just seeing the after effects of sky high inflation and Fed tightening and, everything we're experiencing right now with just home prices way above they've ever been, double-digit inflation. And so credit card delinquency rates are starting to skyrocket. And this is something that will lead into a lot of trouble coming up, especially when we look at just the unbelievable spending and everything that's been going on here recently. So good.
So, I mean, that kind of just looks like, looks like the economy and looks like the stock market did right after they printed $5.2 trillion during the pandemic. I mean, the sucker went straight up. And you know what that was? That was default rates on credit cards. But hold on, let's come over to this economic report right here. The loan default rate is beginning to rise as interest rates remain much higher than their pre-pandemic levels. According to the Moody Investor Services, That'd be a good one to look at, I'll tell you. So people, somebody on TikTok just asked me, can I share some of these economic reports? All right. So you got the Moody default rate. That was the FRED report. I've got right here the Andina Advisors report, which is a family office and their economist. I've got Harry's take. I've got Rodney's take. And then we've got some other economic reports that we're going off of here. But let's get back to the Moody Investor Services. Loan default rates. I want you guys all to pay really close attention to this, especially if any of you think that we're going to set new highs and the markets are going to keep going up and Bitcoin's going to go to the moon. You really need to pay attention to this, because this is one of those lagging indicators that isn't going to get it wrong, folks. Loan default rates hit 5.4% in October. Pay attention. A level typically associated with sharp economic slowdowns or recession. So 5.4% on a default rate basically is associated with slowdowns and recessions. We're going to soft land, huh? Following its current trajectory, so if they just traject the loan default rates, Stephen, if we followed the credit card loan default rates, holy shit, man, I don't even know what that looks like. I mean, might as well hunker down, build the bunker in the backyard, fill it up with water and food, and start growing some plants back there if you're going to follow the trajectory on that one. But this one's a little bit better. So the trajectory basically suggests that the loan default percentage will likely hit 6% in the next few months. Now, this report, that was October, November, December, January. So let's push to February. We'll go 4 months. So likely to hit 6%, nearly doubling its 3.3% average if we go back to 1996. So the average since 1996 has been 3.3% on defaults. We are currently at 5.4, trajecting in the next few months to be at 6%. We expect defaults to continue to rise going into 2024. So defaults are going up. You're not hearing about that in the news. What news are we watching? Not CNN, not CNBC, not all the news. The news is just one giant lie. They're going to paint a pretty picture of rosy, whatever they're basically being told to pitch, whatever they're being paid to pitch. That's what you're going to hear. AI, and more AI. Anyone love AI? Anyone out here using AI? There was a report. I don't know where it was. But I'm sure all of you are using AI, right? And there's a company called ChatGPT. And the report was yesterday, so I'm not going to be able to find it. Stephen, maybe you can locate it. They were talking about the valuation of ChatGPT. It was some absurd, like tens of billions of dollars, I think it was. And it kind of was eerie to me. I'm a little older. I'm 46. Some of you can relate, maybe even older than me. Do you remember the dot-com crash? Remember all the companies that were the top winners, like the Magnificent Seven of then, $80 billion to $90 billion. Okay. This is, OpenAI, not ChatGPT. OpenAI.
Roughly triple what it was earlier this year. So, yeah.
So I just want you all to think about this. Okay. Triple what it was earlier this year. It's valued at $80 billion to $90 billion. Has anyone audited the books? Anyone think maybe they're cooking the books? Anyone think that this is another Enron going on? Anyone think that those numbers are just completely bullshit and speculation? If you said yes, you are right. Congratulations. We got a prize for you. That is the biggest crock of shit I've ever heard in my life. But that also leads me to another thing about how the markets aren't going to push to new highs. And even if they do, it's a house of cards. All the Magnificent Seven. Why are they the Magnificent Seven? Why is the S&P 500 being driven and solely propped up by 7 stocks? AI, baby. Look at all of those 7 stocks, the Magnificent Seven. All of them in one way or the other are tied back to AI and this crazy .com-esque bullshit that is going on in valuations. I mean, Munger is rolling in his grave right now trying to figure out the fundamentals behind OpenAI or any of these Magnificent Seven. He's just like, none of this shit makes any sense. Buffett's just like, dude, I'm just going to sit in cash. I'm just going to sit in cash. Like, can you not understand what these signals mean? We got lagging indicators, which are our default rates. We got credit card default rates off the charts. Hold on. Let's keep going here because now we're on a tangent. And then
you got to see this though, real fast in the AI. Hold on. I'll play 60 seconds.
A can of worms.
60 seconds of this 21-minute video, but you just got to see where we're at with AI. It's unbelievable.
Hello. And welcome to Channel One, a new way of consuming, reporting, and thinking about the news powered by artificial intelligence. Today, you'll witness AI-generated stories and headlines, captivating visuals, and data-driven insights. From global news to finance to entertainment, we'll show you how technology enables us to bring you a global...
In case you didn't read the headline, this lady, all of the journalists in here, all the people, everything on here is AI generated. That's not a real person.
She doesn't look real.
24/7, right from the heart of our AI native newsroom. All presented by our team of AI-generated reporters.
Maybe you hear the words artificial intelligence and you're immediately skeptical or concerned about technology gone crazy.
I'll get you.
Everything you'll see on Channel One relies on trusted sources and facts.
He's a handsome little bugger there, isn't he, Stephen?
Unbelievable. I mean, how are we going to know what's true and what's not? I mean, not that we do even now, but like that's fake people. Like, and that looks real as can be.
Fake people, fake news. Pretty soon we're gonna have fake cats. Pretty soon, when you guys see Cash on here, you should start asking yourself, is that even Cash or is that his AI stunt double? Anyway, hold on. We got to keep going, folks. Listen, I mean, I'm just trying to paint the picture of where we're actually going, not what the news is telling you or artificial intelligence is telling you. And also, if any of you have some time this weekend or this week, you know, you're looking for a good movie to watch, go back in the archives and watch Terminator 2. Just saying. Anyway, going over here to money supply. We've covered this on the channel, but I got to bring it back up. Money supply. Anyone know what that is? The M2 measures the growth of the money supply. For the first time since 1980, money supply is going down. Now, this report kind of goes into a funny thing, and it says this is literally like bunker mentality, because if you really look at this, this has really not happened for a long period of time, and this is like apocalyptic to people. There's a lot of people talking about it's the end of the world. Well, the end of the world is really just the beginning, is that book that I mentioned. But the money supply, folks, here's the report. Stephen can pull it up. We're going down, baby. We're not soft landing, man. We're coming in hot and heavy. We lost both engines. Sorry, not to, talk about planes, but you get the drift. Like, we're not putting this thing down on the tarmac, man. We're taking her straight down. Oh, I could keep going on and on. Let me go to another report that's pretty interesting, and then we're going to come to some questions. So keep your questions coming in. TikTok, I got one asking about bricks. We got some questions over here on YouTube. Keep them coming. We're going to come back. I'm trying to just get through the bulk of the economic reports so you can all kind of understand what we're doing, why we're doing it, why we even do this show. And also, too, does anyone realize that, like, we don't have any advertisements on this show? Anyone realize there's no sponsors? We're not, let's just take a pause and give a shout out to our sponsor, Walmart, for a, rollback is happening this weekend, and you can go into Walmart and get eggs 10 cents less. There are no ads. There are no sponsors. We just do this because you need to hear this, whether you like it or not, whether the truth is the truth or the truth just freaking hurts. You need to hear this. Whether you act on this or not, well, that's on you. Here we go. This economic report. A few countries dominate global GDP, especially U.S. and China. This is kind of interesting because we just talked about the Magnificent Seven, the seven stocks holding up the entire S&P 500, primarily being driven by speculation and probably manipulation, like someone said on TikTok, around AI. Something that we still don't fully understand, something that we still really don't know how to monetize, but yet it's cool. So let's talk about it. You know what? Did we not learn anything from the .com crash? No, actually we did. But now most people have forgotten about it because now the people making the decisions, the people doing this stuff, they're not from that era. They don't remember that. You know what? If you were 38 years old or younger, you didn't even feel the impact of the Great Recession in 2008. That's frightening. You didn't feel the impact. My wife is right in that age range. She's a millennial. Okay, I'm a Gen Xer, so I remember the impact. And my wife doesn't fully understand the comprehension around the Great Depression or the Great Recession and the impact that it had on the world and on families. So most people watching this show today have only seen a bull market, which sometimes, like me and Stephen, are kind of just sitting there just being like, what the fuck is wrong with people? But like Stephen, the problem isn't with people. The problem is with us. We're freaking old, man. We're getting old. We remember the shit that actually happened. Where now people don't even know. They're just like, don't, it just goes up. Just put your money in the S&P 500 and it's going to go up. I just spoke to a client the other day and they had $260,000 in the S&P 500. Why? Because their advisor put all their money in the S&P 500. I said, dude, you're out of your mind. You need to sell that right now. Now, I can't give you investment advice, and I probably went above and beyond out of my range when I spoke to that client, but I gave them all the facts. And I'm just like, you got all this money in one stock. You're not even diversified. I'm like, literally, have you heard about the Magnificent Seven? Maybe you should Google that because you're investing in 7 stocks with all the money that you have. But anyway, like this is happening everywhere, folks. People think that nothing bad can happen to the stock market. Oh, and when something bad happens, the Fed's just going to step in. Yeah, well, Robin Hood's not coming to save the day today, buddy. Here we go. 10 countries dominate 68% of the global GDP. Here's the countries in order: US, China, Japan, Germany, India, UK, France, Italy, Canada, Brazil. And there is a steep decline when we get past US and China. The US, the GDP in the US is 26.855 billion, or 25% of the entire GDP worldwide. China represents 19.37, which is 18% of the total GDP. After that, we fall to Japan, the lost decade. Japan has never recovered, okay, from what happened back in the 80s. They've never recovered from that. So their GDP is 4.4 billion. Or actually, if I'm not, I'm sorry, these are trillions, I think. I don't know. Billions, trillions. There's a lot of zeros here. 4.19%. But here's the whole thing. I just want to read this, okay? Everybody, including Ray Dalio, is talking about China and China, challenging the U.S., for world dominance, which absolutely is happening right now. You see it, you hear it, it's coming. But the problem with China is China's done. China's done. I'm going to tell you that right now. How is China done? Why is China done? It comes back to some bad decisions they made a couple of years ago where they told the women that they can't have more than one child. That they literally scared people out of having children. And when you scare people out of having children, well, what do people do? Well, they stop having children, or they stop having as many children. And then all of a sudden, China started saying, no, go have kids. You can have 2, and then you can have 3. And hell, just go, watch some porn and just have at it. Like, make as many kids as you can. And the citizens of China are just like, nope, it's too expensive. It's too expensive. We can't. We just got through the pandemic. Like, you didn't even let us go outside. Like, why do I want to bring kids into this world? Like, let alone I got to, me and my wife and also our 14-year-old have to go to work just to afford to live. I'm not just talking about China, but here's what's going on in China. Let me read you this. That book, The End of the World, is just the beginning. The whole beginning part of that book is all about population and how the entire world has a population problem. Because at the growth that we've seen all the way through all of our lives, okay, our entire lifetimes, the growth that we have seen is done. Why? Well, not because the feds can't print more money, not because Bidenomics isn't going to work, not because of anything that has to do with politics, because we just don't have enough freaking people. Stephen just pulled this up right here. 1.28 children is the average for women in the that's the United States, right, Stephen?
China.
That's China. U.S. isn't much different, but a little higher. I think it's like 1.7 for the U.S.
Yeah, 1.64.
1.64 in the U.S. See, I'm trying to pay attention. I might get the numbers a little off, but China, 1.28. And China needs, if I'm not mistaken, 2.1 kids out of every woman to stabilize their growth. But that isn't going to happen. So here we go.
Japan could be completely Japan's going to be gone.
Japan is done. Japan, it's over for Japan, folks. And I love Japan. Their culture is one of the best in the world, but it is over because it's too late, too far gone. Okay. They don't have the population. And in the US, it's the same thing. Do you realize that the millennials were the last generation of growth? After that, it's downhill, baby. It's downhill. But in the US, we've got, Cashy, can you just get out of the way of TikTok? They don't want to just stare at your face. But in the US, we have a chance because we have land here. We have resources here. If we stop like playing this Green New Deal bullshit, thinking that that's the answer, if you study from any geopolitics or anything, you study oil and you look at reports, folks, we can't go green right now. We don't even have the infrastructure to go electric or windmill or any of these things, not even close. But anyway, let me get back to this because I know I'm jumping all over. I just get excited here. All right. Almost all the growth in the coming decades will come from emerging countries, but China is both the largest country and the only emerging country literally to be peaking in population now. It will decline in population from 1.4 billion to an estimated 780 million over the next 50 years. Oh, and China has overbuilt homes so that 22% of the homes they built are vacant. Hence, the country will never need to build another home to get from 65% urban today to 87%. About as high as it will ever get. And the U.S. obviously will grow much slower ahead as it has aged rapidly and nearing saturation in terms of urbanization at 83%. So how this all plays out, folks, is we are looking at a 500-year mega innovation cycle. You don't need to know what that really means, but it will not peak until 2140, far ahead, okay, way ahead of most of our lives. As a matter of fact, most of us won't see that. And the last one was in 1648 in Europe. Hence, it's not the end of globalization, or hence, this is not the end of globalization, the powerful driver for the longer-term cycle since the late 1800s. But from now until the next term peak, which is the life we're going to be living here, such growth will not be as high as it has been since World War II until we have an aging revolution, until we start having more kids. We can't grow anymore because the amount of people aging out of the workforce, the amount of people retiring out of the workforce, the baby boomers and the silent generation, talking about the United States of America, are significantly greater than the new people coming in to fill their seats. Not only that, but the newer generations, maybe not the millennials. The millennials are the last great hope. So if you know millennial, be nice to them. They're literally the last hope this country has, because I don't even know, Gen Zs, Gen Ys, whatever the other generations are, their work ethic will never, ever sustain. It will never, ever get us where we are, because this country was built on hard work, long hours, and people that wanted to grow and create. And the future generations, hopefully not all millennials, the future generations don't have that mindset. They have an entitlement mindset. They have a mindset that things should just be handed to them because it's been too good for too long, and that's the problem. But folks, you need to really pay attention to this. Population isn't a quick move. It isn't something that can just turn around today. If we all just go out there and start popping out kids, like, it's still not going to happen in our lifetime. It's going to take one full generation to even turn it around. And that's if we all started popping out more kids. You need at least a little over 2 kids per woman in this country. Yes, and I am not talking about the she, he woman. Okay, I'm talking, last time I checked, women are women and men are men. And women can have kids and men cannot, even if they don't look like a man. I'm not going down that road too much, but come on, folks. Come on. We got to make real babies here, okay? So start eating clams, I think, are an aphrodisiac. Start reading some books on aphrodisiac stuff to kind of get you ready.
Oysters.
Yeah. What is it? Oysters?
Oysters,
what did I say?
yeah.
Clams? Oysters? Whatever. I don't know. I guess I got some work to do on that as well. But anyway, my
spend more time in South Florida.
Years are, yeah, exactly. So anyway,
I will say one thing on that, Chris. One thing on that is, one of the biggest excuses for young people not having kids is the cost of living, is how expensive things are, and they can't afford kids. And then, by the time they can, it's oftentimes too late. I've seen it happen with people I personally know, and that trend is getting worse and worse. And it just, if you want to get conspiratorial with it, it's like, is that all by design? Are they making it unaffordable for a reason to make people not want to have kids, to have that control and have the declining birth rates and everything like that? I mean, look at this chart that Wall Street Journal just put out. So this is the cost of renting versus owning a home. And look at how expensive it's become to own a home. Average monthly home payments now over the last couple of years. I mean, that is unbelievable. I mean, even rents are becoming unaffordable, but look at trying to own a home. It's just, people aren't able to do it. And so what does that look like,
Absolutely. And I saw something on that, Stephen, that right now, roughly in the next 10 years, they were saying 40% of all single family homes will be owned by institutions. 40%. That trend that you just saw there, that's why you're not going to, the future generations aren't going to own homes like we do. Okay. They're going to rent homes, and they're going to rent homes from big institutions like BlackRock and Blackstone and Vanguard and, all of them. They're the ones buying up all the homes. There's literally movement in Congress trying to put a stop to that, but that probably isn't going to happen in time. So let me hit some of these questions. Gary came in and said something good. He said, completely agree. The Green New Deal is going to hurt us more than help us. Let's see, because we have built, let's continue to grow. Who pay? Oh, Tim D. Little says, who pays this guy? I don't know. You know, I keep wondering that, Stephen. Who the hell is paying us? Because like, I need to get paid here, folks. Like, I'm not getting paid for this. Like, yeah, give me a call, Tim. Give me a call, dude. Do you want to pay me? You can pay me.
Hey, we're
I don't know.
Sponsors. I mean, what do you got? Yeah.
Listen, Tim. I got some really good advice for you, Tim D. Little on TikTok. A wise man once told me. He said, "The secret to success is to give your best stuff away for free." So, who pays me? I am a professional penny and nickel picker upper. That's what I am, because I give, and I give my best stuff away for free, buddy. So we don't need to track down who's paying me, because I'm not keeping track of it. All I do is I give. And for somehow, some way, buddy, I don't know how it happens, but man, money just keeps coming in. And then I just keep giving, and money just keeps coming in, and I just keep giving more, and more money keeps coming. It's almost just like, stop. But you want the money to stop coming in, stop giving. So who pays me? I don't know, man. God, the universe. I just tapped into something that all of you should know. Okay, let's see. Brand building, abundant. There was a couple other good ones here. Could be had for government trying to control the population. Yeah, absolutely. There could be. Gary said the argument could be had for the government trying to control the population with the cost of living. You could also say that Bill Gates is trying to control population as well. You know, who knows? That's conspiracy theory shit. But anyway, all right. So let's move over here, Stephen. What do we got on Facebook and YouTube? I know a bunch of really good stuff came in. Let's hit some of these questions. You got any good ones where we can kind of tackle them in the last 10 minutes here?
Yeah, just a lot of the same. I mean, just, Lisa's saying even worse when it comes to junior high school and high school kids, just beyond the entitlement and what they feel like they're deserving of. And, you see a lot of that. I mean, Duck V, the whole economic model must change. And, there's a lot of truth in that, what's going on right now.
Well, hold on. This one's a good one too. Michael came in from Facebook. Is this why Democrats, and notice he didn't say Democrats, he just said Democrats, are willing to let our borders stay open? Yeah, like, folks, listen, it's all in that book. The End of the World is just the beginning. Like, it talks about why the borders are wide open. Like, it's population. And it also comes down to what everybody just said, like what Duck just said. Like, we have a major problem in this country. People don't want to work. People don't want to do the hard jobs. There isn't American citizens that want to go out and pick corn and tomatoes and do the hard work and dig the ditches and do the stuff that this country was built on. So who's going to do it? Open the borders. People that actually see the opportunity for the greatest country in the world. The greatest opportunity in the world is the United States of America. And you know what? Mexicans, they see that. Other countries, they all want to come here. So they open the borders because we're, number one, not making enough babies. We need some more. What did you say? Oysters? Oysters round. Everybody, that's on me. Okay, we got oysters going on here. Eat those oysters and drink the Red Bulls. Anyway, Red Bull gives you wings. 2 eyes. Yeah, making sure I'm hitting the compliance dots here. But anyway, it's really, really important that you guys understand that. Like, the borders are probably wide open. Number one, maybe they're trying to buy votes or get more voters, but I think it's really the population thing. I literally, for the first time, that's my belief on it as well. Let's see here. Dogs and cats instead. Yeah. Economic model. What other ones? I saw some other really good ones here. People were taken advantage of for too long. Yes, people need to receive fair pay, and they are willing to work. So Ella, coming in from YouTube, that's a good point. So Ella's saying people were taken advantage of for too long. And I agree. Like there was slavery, there was all sorts of things. But if you think slavery is dead, it's not. It's very alive. It's just not alive here in the U.S., so to say. But if you go over into Africa and you go into the mines where they're digging up all the stuff so that they can make all these electric vehicles, that is slavery, folks. Look it up, because, but yes, people should receive a fair pay. But what is a fair pay? A fair pay is not a check for sitting in front of your TV doing nothing. A fair pay is not an entitled person that thinks they should, like last week, work 30 hours a week and be entitled to be able to live whatever life they want. Fair pay is a very interesting thing, but it's also when we say you need to pay your fair share in taxes. Mr. Biden said you must pay your fair share in taxes. Define fair share. Because I think I pay my fair share in taxes, but some people would say I don't pay enough in taxes. Some people would say Warren Buffett doesn't pay enough in taxes, but he pays his fair share according to the IRS code. Look that up. So what is fair pay and fair share? Millennials and Gen Y. Yes, I'm a Gen X born in 75. Gen Y millennials starts in 1980. Yep. Okay. Thank you for that. Oysters. Thanks, Huckleberry. Let's see. Oh, Julie, I just saw this. Actually, this is in the book too. This is kind of funny, folks. Maybe this is coming to the U.S. soon. In Australia, they are subsidizing people who have more kids. So literally, you get paid to go out and do the dirty. They get a stipend for children. Not sure if that program's happening or not, though. I don't know. Well, hey, sounds good. What business is BlackRock in? The world domination business. Let's see. What other ones we got? Any other good ones here? Duck is doing his part for children and helping population. Thank you, Duck. Thank you so much. He just had a new child recently, so he is contributing. Yep, the housing supply will never meet the demand in the future. Very true statement here in the U.S., not in China. Yeah, Claude Johnson, I agree with that too. There's multiple ways we can look at the open border policies that are happening right now. Good, bad, and indifferent. Let's see. Open the borders and tax them. Yeah, but that's the problem, Vincent. Doesn't seem like they're taxing them, right? I don't know. More on that later.
Just to document on the show, since we've been doing so, while you're reading through the comments, we're almost at 34 trillion in national debt, with the debt rising by about $1 trillion an hour right now, or $100 million an hour right now.
This is interesting. Jimmy Mack 3 coming in from YouTube said, wouldn't the government get more in taxes if they actually got out of our way and let the economy grow and let us earn more? Let that sink in, folks. Absolutely. I totally agree with that. People inherently will create if left alone. But when you do what the governments always do and try to control everything, I mean, listen, communism is the greatest example of this. Communism in its simplest form is when a government controls everything. How's that working out for taxes? It doesn't, because it creates a very poor country. Communist countries are poor. Why? Is it because the people don't want to work? No, it's because the people are not left alone to go out there and create. They are not incentivized to create because the government controls everything, as if the government can do everything. Socialism, just as fucking bad. In the United States of America, we are no longer a capitalistic country. We are a hybrid of capitalism and socialism. Denmark is indeed a capitalistic society. Go there and look. Capitalism, for good, bad, or indifferent, however you look at it, and depending on how you view what's happening, capitalism has one thing going for it. It motivates creation. And creation is the almighty. God created everything we have. Creation is the ultimate. When you stipend or you limit creation through government interference, of course you limit the taxes that the government would be paid. So that's a cool one. And again, folks, listen, we're just ranting here. This show, we rant, we rave, and we argue. I haven't had to argue with anybody today. Capitalism is not compatible with Christianity. A lot of other people would disagree with that. Everyone loves capitalism until it affects their pockets. That's true. They have to take from the fund. Yeah, they have to take from us to fund their programs. That's socialism. Listen, look at Social Security. It's broke. It's broke. Can't sustain. There's not enough new people coming in to feed the Social Security system. But why? There should have, by all intents and purposes, with how Social Security was created, there should have been more than enough money to make sure that everybody got a check until politicians' hands got in the cookie jar. Yep, that's exactly what happened. But all the other socialistic programs, from Medicare and Medicaid, broke and broker. We can just keep going on. Hence why the government has to keep borrowing money from the Fed and has to keep paying interest. Now over $1 trillion, almost unsustainable. Ray Dalio said we've crossed that level. Oh, yes. Yeah, y'all love Reagan until his speeches on Social Security. Listen, you can love any politician, and there's always going to be a bad and a good with each one of them. Still trying to figure out the good in today's, but anyway. But dude, I struggle with that one.
Bidenomics is done, by the way. They've completely eliminated it from all discussions, all speeches, all talk, and realized that people were having a negative association with Biden and the economy. So they've cut Bidenomics out of it. So at least they're kind of learning from their mistakes.
Yeah, I suppose so. I forgot to mention, in all those economic reports I was talking about what's going to push the market higher. We talked about war, maybe World War III. We talked about all these economic indicators. We left out the inverted yield curve and some of the other key ones. But the big thing we didn't talk about is, y'all remember that next year is an election? It's probably going to be a super controversial election, probably going to be a really interesting election. But you think that's going to be good? I don't know. That one's an interesting one. So I'm going to leave it with Huckleberry Taz from YouTube. Huckleberry said, "We are all slaves, just too comfortable to do anything about it." I'm sure there's some truth in that too, but that wraps our time up for today's WTF, What the F Happened. Hopefully all of you will join us this afternoon at 1 p.m. Eastern for Wealth Webinar. To join us for that show, all you do is you go to chrisnaugle.com. Scroll down, register for the Wealth Webinar. Oh, yes, whoever that was, it is totally free. So I still don't know who's paying me for that. But, yep, Wealth Webinar, totally free. Matter of fact, we give you all 3 of my books. I actually have more than 3 books now, but one on how to get all the money back for all the cars you buy, drive, and own, Mapping Out the Millionaire Mystery, which is about the infinite banking concept, and Private Money Guide. You get all 3 of those books for free just for registering for free for the Wealth Webinar. I know a lot of people out there probably register for the Wealth Webinar to get the books, and they don't even show up. That's cool too. Just go out there and create and do good. And in this season, as we approach Christmas, just remember what I said earlier. The number one thing you should all be focused on is giving. Give your best stuff away for free, which includes big old hugs and kisses to all those you love, and tell them how much you love them and appreciate them. With that being said, folks, that'll wrap up this edition of What the F Happened. We'll see you on the next one.
See ya.